And we are live. Can you guys see me? All right, before we start this stream, let's go ahead and get some housekeeping out the way. Nothing in this video or live stream, if you want to call it that, is to be taken as financial advice. Please do your own due diligence. It's your money, your responsibility. With that said, you guys, let's go ahead and dive in to the uranium news. It just keeps getting better and better. The hits just keep on coming. And you know what? I mean, we just hit a decade-long high in the spot price for the uranium metal. I know a lot of you guys are amped up. Let's try and control our temper. But we've got a lot of good news to share with you. We're going to look at the technicals. We're going to look at news items that I've picked up from Twitter or X, whatever you want to call it. And we'll take chats, super chats. And with that said, let's go ahead and dive in. First, we've got the weekly candlesticks on the uranium spot price. Uranium closing at $66.25 for the week. And as you can see here, we broke the most recent high of last year, April of 2022, where we were just at about $64, just shy of $64 about a year ago. Broke free from that, and check this out. We haven't been at these levels in over 10 years. Since 2011, that's essentially the year of Fukushima. Fukushima happened in March, which was around here. And, we are heading towards that level. Now, this 70, let's zoom in a little bit. This $73 level here that we see that was taken out by the Fukushima incident, that is probably going to be our next resistance. Now, as you can see here, we broke through this resistance from 2022, and we are making our way up. Could we come back and retest? I don't think so. The uranium market, the spot market at the very least, doesn't really behave with the same technical analysis. I would say doesn't really apply much to this spot market, but what it would apply to is the miners. So let's go ahead and take a look at the miners through URNM and check this bad boy out. Look at this thing. So again, we are on the weeklies. Look at this volume here on URNM. The biggest volume that we've seen in a year, just about. And we are knocking at the doorstep of this, call it $47 level. This was the second hump after the peak here in November. This was the April 2022 high. Now that's the next boss fight, guys. We beat this boss in June. We beat this boss in January. And then we beat this boss in September. Second to last boss. Big last boss fight. Right here, November 2021 highs. So we've got to make it through this $47 range. Currently sitting at $44.78. And the candlestick looks really good. I mean, look at this big fat green candlestick. We haven't seen anything this big. I mean, let's take out our ruler, okay? And measure this bad boy out. So that's 4.35, so $4.35. The biggest one that I could see was probably all the way down here, and that stretched 461. That was all the way back in August of 2022. So got a ton of volume. We haven't seen this much volume since August, which is what you can see here. Buyers are starting to come back in. It's been a steady move up. Now, I want you to take notice of one thing. See how, since about the start of the summer, we had been moving fairly modestly with these fairly modest green candlesticks, right? The green candlesticks are there, but they're small, right? You've got this one here, This one here, now they're starting to get a little bigger. This one here, they're getting bigger. This one here, and then boom, look at this week. What a beast. Now we do have a bit of a wick here, but it's not too big of a wick that I'd be concerned about, right? Like if it was, if we were like, if we had closed the week somewhere around below the halfway point on this candlestick, I'd be a little, I would probably say that the sellers are starting to overpower the buyers. But no, it looks like the buyers are in control. Now, with any of this stuff, you guys, there's going to be profit taking at some point. It has gone up fairly fast, fairly quick. Quite a bit, fairly quick. Now, this yellow line is your 50-week moving average. And, I mean, look how far above we are compared to it. Now, let's switch over to the dailies. Let's kind of get a more granular view. And so we've got our 50-day moving average here in yellow, our 200-day moving average here in purple, and we are well above both of those bad boys. Check that out. I will say we did close out the day with a reverse hammer candlestick on Friday. So could we reverse back down? Although the weeklies don't really point to too much concern. On the daily level, there might be a bit of a pullback given this reverse hammer candle pattern. There might be a bit of a pullback. So, but I could be wrong. I understand. I'm essentially saying nothing. It might go up. It might not go up. It might stay constant. Well, that's just the name of the game. But probability-wise, I would say that it's most likely to come back down because of this reverse hammer candlestick, at least in the short term on the daily level. Now, again, when you zoom out and when you analyze this thing on the weekly level, then I would say next week is probably going to be another move up because, I mean, just look at the strength of this green hammer candlestick. Green candlestick. So on a daily level, we might see some pullback intra-week. But from an overarching weekly level, I think things are looking fairly well. Now, let's zoom out and look at this thing on a monthly level. Now, what do we see here? We see a big green candlestick starting all the way out in June, another green candlestick in July, another green candlestick, now it's getting bigger, in August, and then a huge green candlestick, bigger than all these other ones, so far here in September. And September is an incomplete month. We are just a little past midway through September. So lots of momentum starting to build up. Is momentum starting to slow? On the monthly level, I see no signs. I see no signs because we're halfway through the month and we've already overtaken the last 3 months in terms of just pure size of move. Let's go ahead and look at URNJ. Now, URNJ is the new kid on the block. We don't really have much data on URNJ, going all the way back to February of this year. But I will say you are seeing the same thing here. Big green candlesticks getting bigger. And look at how big this most recent one is. Let's zoom in a little bit on the weeklies. And the weeklies, wow. Pretty much the same pattern that we saw in URNM, don't you think? But check out this volume. This volume has not been seen ever on URNJ, despite its newness, let's say. Now let's go over to the daily. The dailies. URNJ with this this week. It's really a flimsy looking hammer here, this reverse hammer. Again, we might go down on an intra-week basis when it comes to the URNJ ETF, which is the junior miners. But let's take a look at let's take a look at some ratios. This is URNM divided by the uranium spot price. Now, we're comparing uranium versus uranium, but in a bull market, you should see more capital flowing into the more speculative names. So, URNM, the large cap miners should begin outperforming the spot price, right? And is that what we're seeing here? The answer is yes. The answer is yes. I mean, look at this. Look at this support line here. We've touched it multiple times. And look at this resistance line, built all the way up in the beginning of the summer. This little wedge formation, boom, broke out of it. URNM is outperforming the metal itself, although as of Friday, we did have a reverse hammer candlestick. So on a daily basis, on the daily level, we might be in for a little bit of a pullback. Again, this is kind of the signs that we're seeing from reading the charts. Let's zoom out, look at the weekly candlesticks. Weeklies are looking quite well, I must say. So URNM looks poised to continue moving higher, although it does seem like it's showing a little bit of weakness here, but not too much to be concerned about. So URNM continuing to outperform the uranium spot price. Let's look at URNJ compared to URNM. And again, I mean, the same story here, guys. Let's look at the dailies first. URNJ, at least since August, has been outperforming URNM. So what you'll end up seeing as this bull market matures, you'll start seeing more and more money flow into the speculative names, right? CCJ, Cameco, which is your biggest market cap uranium company aside from Kazatomprom, has moved up quite a bit. Your large caps are going to move first, then your mid caps, and then your small caps. So capital always flows into the biggest market caps first, the least risky, let's just say, and then it just filters on through to more and more risky assets. It goes further down the risk curve. So it looks like we've gone through this big move in the large caps, and now, a lot of that capital starting to flow into some of the companies in URNM, which is what we see here. I don't see any chats in the chat. Can you guys chat, or do I have it turned off or something? You guys doing all right there in the chat? Let me see. Do I have chats enabled? Let's see what we got. Live reactions. Yeah, I think everything is fine. See, can you guys chat? Give me some ones if you can chat. Give me some ones. Drop me some ones in the chat. All right, well, we'll see what's going on there. Anywho, guys. Yeah, capital's starting to flow into some of the more riskier names in the uranium space, which is what we want to see. That means that the overall space is in really good health. Let's look at uranium versus gold. It's one thing to compare uranium to fiat currency that can just be printed out of thin air, but it's another thing to see how well we're doing versus gold. From a long-term perspective, we're continuing to move up. The trend is up, at the very least since 2019. As of this most recently completed week, just take a look at these green candlesticks. Uranium is destroying gold. Absolute destruction, guys. All right, guys. I see you in the chat now. I think I had something turned off on my end. Mutant Rayev says, when it is a commodity, the sellers, aka producers, have control over the buyers, aka consumers. You are looking at this as a stock and not a commodity. I think you're referring to the uranium spot price, right, Mutant? If so, then yeah. It's not. Technical analysis doesn't really apply well to the uranium spot price just because it relies heavily on contracting, and it's an opaque market. And if you need stuff, you're going to buy it. There's very little market timing involved when it comes to the uranium spot price. Cool. Let's look at uranium versus oil. Check this out. So for a while, it seems like oil's been outperforming uranium, but as of the last few days, uranium's been doing fairly well. Granted, a reverse hammer candlestick here, but we are hugging this 50-day average and not straying too far. So things are looking good there when priced in oil. So if you actually zoom out quite a bit, let me turn off this automatic scale so it doesn't just go crazy during March of 2022. Let's see what we got here. If you actually zoom out and let's look at this thing on a weekly basis, where are we evaluated at? How are we doing compared to the highs of 2007? So if we compare today's value to the old high, I mean, we need a triple to get back to those old values. And now oil is beginning to move. So that's assuming that oil stays constant. Which, oh, by the way, it won't. Not financial advice. All right, let's wrap up the technical analysis piece with some Sprott Physical Uranium Trust. So how is SPUT looking? Finally into premium to NAV territory. As of the week, check out this big bulging green candlestick on the weeklies. Boom! We had been moving up, and then boom. This is the highest level we've seen in the trust since about, let's say, 08. Since 08. Things are on fire in the uranium space. Super exciting. Brandon Messer says, I am not trying to jinx anything. Neither am I. But things are looking good. So good. So good. All right, let's dive into some news here from Twitter. Or X. Whatever you want to call it. All right, this is from John Quakes here. He is looking at seasonality in the uranium space. More specifically, Cameco. So I want you to look at how... so this is the arithmetic average seasonal chart. So when this goes up, that means the price goes up. When this goes down, the price goes down. And this captures seasonality across the years. So this is a 20-year range. So over 20 years, this is how uranium typically behaves across the seasons. So you see here, we've got the summer doldrums in May up here. And we just go all the way down in August. But then after that drawdown in August, I mean, it's grip it and rip it, baby. I mean, we're going to go all the way up to here. I mean, look how much we tend to grow heading towards the end of the year here. I mean, we've barely seen anything. We've seen, here. We've seen a move in the spot price all summer long here, right here, okay? During a time when it should be going down. Okay? Now, we've got the wind to our backs now. We essentially we got the $65, $66 uranium price with the wind right in our face. Now, what's going to happen when seasonality stops being an object? What's going to happen when seasonality begins playing ball? What do you guys think is going to happen? You think there's still going to be profit taking in the mining space or no? All right, so let's look at these charts. So we've got the top one, which is Cameco seasonality, right? You can see Cameco shares tend to go up during Q4. And then this is Cameco relative to the S&P. I mean, same thing here. Cameco tends to outperform the S&P in Q4. Tends to underperform the S&P in Q2 or so. And then Cameco relative to the energy sector, same thing. Q4 is the magic quarter. It only takes a quarter to ride this ride. A quarter four, that is. Man, where do I come up with this stuff? My God. All right. We've got another chart here from John, our good old friend John Quakes. Let's see what we got here. He says, highly recommended reading through the latest uranium report from Tribico's Guy Keller with his take on supply versus nuclear demand. His quality graphics strip out WNA's obfuscating unspecified supply. Noise to show the real meat on the bones on the nuclear fuel report. So what do we got here? So this red line is the demand that they've kind of forecasted out up until 2040. These black bars are your existing mines. The gray bars, or the gray sections of the bars here, denote your restarted and idled capacity. So even if you restart all these mines, I mean, demand is higher than the supply. And this thing really begins to open up in the 2030s, guys. I mean, that's why I think this might be something we play for quite a while. It's not, at least in my opinion. What do you think? Do you think that we're going to shoot up? It's going to be a grip it and rip it bull run, blow off top sometime the next year or two, and then we just sit around waiting for the next bull market for another 15 years? Or is it going to be a steady, are we going to have local blow off tops, right? Like, are we going to have a blow off top in 2024, 2025, and might correct back down in 2026, 2027, and then we just resume the bull market in the 2030s? That could be a possibility, because just look at this deficit here. Demand in red, supply here, denoted by the bars. I mean, where is this stuff going to come from? And this is in tons, by the way. All right. So if you look at all the way out into 2040, I'm not saying I'm going to hold all the way out into 2040 for another 20 years or 15 years, but this might be something we play, coming in and coming out. Nick Hornsey says, this is going to be a much longer bull market than I first thought when I started. Same here. When did you start, by the way? I started back in 2020. Drop me a chat. Let me know when you guys started. Month and year. Let's see who's been in this trade for the longest. Nick Hornsey is at 2019. Not a bad time to start, actually. All right. I think we've got some more pictures that he's posted on here. No. See what else we got here from Mr. Quakes. Yeah, and here's another good one. So this is from Deep Value Guy. Global utilities. Fast, running out of supply options. Regarding contracting and not enough uranium being mined to supply current nuclear fleet, let alone the largest reactor build program in decades. All right, so this is another view. So we've got, all right, so we've got three different scenarios of demand. So the middle gray line is kind of like your average, like the expected demand, right? Your black line here is like, you can kind of think of that as your upper bound. That's like if that's the highest that they anticipate demand being. And then your bottom gray line here, this lighter gray, is your lower bound. So it's kind of like a margin of error, all right? So even if, and then kind of the same thing here with these, on the supply side with these bars. So hold on a second here, guys. That's what happens when you go live. You get people at your door. So chat, let me know, how long do you think that this bull market will last? All right, guys. Sorry, there's someone at the door. I'll be right back. They're not here yet. They're not here? No, but she probably ordered it to this house. This is her family. All right, guys, sorry about that. So we have demand skyrocketing up, leading all the way up to 2040. Even the worst case scenario, you're going to have a gap between demand and supply. Now, the last bull market was nowhere near this. We were not in a deficit. We were not in a deficit, yet the price rose to $140. So what's going to happen now? That this is how 2023 looks like. This is how 2024 looks like. We might have a local top in 2027. Things might kind of blow off then. We'll see. But this thing is going to resume higher. See what else we got here. Again, the same chart from Patrick Downs. He's got a number of visuals here. So this is the nuclear footprint in Asia. We've got our operational and under construction nuclear reactors. You can see here China with 59 nuclear reactors, most of them being operational, but a good chunk under construction. India 29, South Korea at 28, Japan coming back online. Mr. Rick Rule is couldn't be happier. 35. So Asia represents 31% of operational reactors, 29% of total net electrical capacity, 65% of under construction. So once this stuff comes back on, I mean, they're going to need uranium, right? And it's all going to go to Asia, or at least 65% of 65% of it, at least. Not exactly. It's kind of an estimate. 64% UC electrical capacity. So China and India are driving the most growth, while other Asian countries are also ramping up nuclear reactor construction. All right. So Gil says he started in June of 2023. Not a bad time to start. Not a bad. I mean, if you had to start over the last year, that would probably be the best time to start. I mean, you grabbed the bottom there, at least the local bottom. All in on URA. URA is a good one. It's a good ETF. You've got CCJ, less risk on the table. If you're going to go all in on something, probably best to do it with an ETF. Great entry earlier this year, Gil. Nick Hornsey, yep. Nick thinks that we will probably top out around 2029 and 2030. Justin Lazerte, hopefully I didn't butcher your name there, my friend. Love the live stream. Appreciate you. Thanks, man. I enjoy making these live streams too. Of course, when I run one of these live streams, I have someone coming knocking at my door. So thanks for bearing with that. Let's see what other interesting charts we got here. So this is energy return on investment with and without storage. And it says from Investopedia, when energy return on investment is large, that means that producing energy from that source is relatively easy and cost effective, right? So you're putting in energy to extract your commodity, and you're getting way more energy because your ROI is large. So it's easy and cost effective. Makes sense. When the number is small, obtaining energy from that source is difficult and expensive. Now think of it this way. When you get a brand new toothbrush or what do they call it? Tube to brush your teeth. Oh my God, it's Alzheimer's mode. When you have a brand new tube of anything, it's easy to get the gel out, right? But the more the more you use it, it's going to take more and more effort to get that gel out from the bottom. You're going to have to squeeze really hard to get what little left of it there is. And it's kind of the same thing with these commodities, with these resources. So, for example, it says when the ratio is 1, there's no return on energy invested. Yeah, that's essentially what it is. It essentially means that your numerator and your denominator are the same. So you're essentially using as much energy to pull this resource out of the ground as much as it gives you. I would hearken to say that it's a net negative because you're wasting time pulling that resource out of the ground. According to the World Nuclear Association, the break-even number is 7. All right, so let's go through all of these different energy resources. Solar. Without storage, it's 3.9. With storage, it's 1.6. So we need EROI to be above this shaded space here to break even. Okay? Solar is not break even. Biomass is not break even. Wind with storage is not break even. You need storage in order to make wind a break even proposition. Solar is CSP is barely break even when it comes to storage. Now we can keep going through these. Coal has an EROI of 30. Hydro, you're looking between 35 to 49. All right, so then we move into nuclear. Nuclear Gen 3 and Gen 3 and Gen 3 plus, 75. Now, this is where it's going to get bonkers, okay? Nuclear Gen 4. This is on a logarithmic scale, it seems, right? Because you're going from 75 to 750. The EROI on nuclear Gen 4 is greater than that of Gen 3 by a factor of 10. 10. So, yes, we're going through an energy shortage, but we don't we don't have to live in poverty, guys. We don't have to live in energy poverty because we've got the resources. We've got nuclear Gen 4 technology that has a 750 ROI, energy return on energy invested. So like cut the Malthusianism. The Malthus BS. All right, how long does it take to build a nuclear reactor? All right, so it says here, construction time of nuclear reactors that were operable by March of 2023. All right, so this is what we're looking at. So the time it takes to build a nuclear reactor, this includes reactors still in operation, plus those that had been shut down or decommissioned. And this is a chart that shows the share of nuclear reactors taking less than X years to build. All right, so the way to read this chart is, you've got the number of years in construction time here on the x-axis, on the bottom axis, right? It goes from 0 to 40 years. And what we end up seeing here is that about 20% of your reactors take 5 years to build. Only a small sliver take like a couple years. Like it's barely above 0% here, you can tell. And then you've got 40% or so that take around 6.3 years. That's the median construction time. The average construction time was 7.5 years, which is somewhere around here. So you're looking at around, let's say, 5 to 7 years, 5 to 8 years to build these reactors. And so, yes, the nuclear story is starting to spread, but by the time, this is not a freaking switch you can flip on, guys. This stuff takes, you can see here, 5 to 7 years to turn on, to build. In the meantime, supply is still going to be constrained because that demand that takes 5 to 7.5 years to come online still hasn't come online. There is a lag. There is a lag involved. Let's go through the news here. This is from the Financial Times. Oh, so reputable. Uranium prices hit 12-year high as governments warm to nuclear power. Cost of yellow cake jumps to levels not seen since before 2011 Fukushima disaster. Yep, got that right. We already covered that. Uranium prices have surged to their highest levels in 12 years, underlining a global renaissance in nuclear power as utilities race to lock in fuel supplies. Prices for the commodities, dubbed yellow cake, have jumped about 12% to $65.50 a pound over the last month. It's actually over $66. Thank you very much, Financial Times. Fact check. Been fact checked. All right, breaching last year's peak to reach heights not seen since 2011, according to the data from UXC. We've looked at UXC prior in the stream. Uranium demand has been lifted by governments from Washington to Seoul and Paris, seeking energy independence by extending the lifetime of the existing fleet of nuclear reactors as they contemplate building new plants after gas prices skyrocketed due to the Russia's full-scale invasion of Ukraine. Yeah. So the energy, the lights are not going to go off. At least not for a long time, because nuclear power will supplant hydrocarbons. The milestone for uranium prices marks a big step towards nuclear power's reemergence as a critical carbon-free resource of baseload power in global efforts to tackle climate change, a role that had been undermined by Japan's Fukushima nuclear disaster in 2011. Yeah. So it checks off the boxes. The climate change folks like it now. They've come around to it. And it's energy dense. It's energy dense. It makes sense. It makes a ton of sense. And there's really no reason not to have a full-scale adoption of nuclear. So it says here, you have a focus on energy security colliding with a focus on clean energy, said Grant Isaac, Chief Financial Officer at Cameco. Yep. It's not going to be a debate over climate change, guys. At least that's not going to be the prevailing debate in the Western world. It's going to be energy security. Because at the end of the day, people are going to want the lights to come on. People are going to want AC during the summer times. People are going to want heat during the winter time. It's all about energy. You had it way too good for way too long. You lose sight of what you have. You don't appreciate something until it's gone. The days of buying $40 uranium are over, and probably also for $50 or $60. We're going to need new supplies yet. Yep. So kiss $60. Mwah. Goodbye. Bye-bye, $60. Bye-bye. Uranium prices relative to highest levels since 2011. Yep, this is the same chart we just looked at. The pullback in uranium demand and prices following the Fukushima nuclear disaster led to a dearth of new mining projects being developed, helping to lay the groundwork for higher prices now. Yeah, so demand fell off a cliff, which disincentivized supply to come online, and now demand has come back online, but supply has to lag behind demand, and this is where we're at today. A coup in Niger, which generates about 4% of the world's uranium, has added to the upward pressure, as has Cameco, announcing its September lower full-year forecast for production due to challenges at its Cigar Lake mine and Key Lake mill in Canada. Sound familiar? Chat. Pop quiz. Drop me the answer if you know it. But what was the catalyst for the last uranium bull market? Hint. It had something to do with Cigar Lake. Whoever knows the answer, drop it in the chat. Orano, France's majority state-owned nuclear company, said last week that shortages of critical chemicals have led its operations in Niger to bring forward planned maintenance. Prices are still some way off their $73 a pound level from before Fukushima disaster, which left the uranium market oversupplied for more than a decade after Japan and Germany began decommissioning their nuclear fleets. Yeah, so demand came offline, and all of a sudden you had all this uranium in the market. What's the incentivized production? And Stephen M. 22100, he says the flood of Cigar Lake. He is correct. Congratulations, Stephen. You win a piece of cake, piece of yellow cake. Jonathan Torialba, cool name. Sorry if I butchered it, but he says he loves the channel. Thanks, Jonathan. Really appreciate it, man. Pergender, director of WMC Energy, a commodity trading merchant, said that the steady increase in price was mainly driven by energy utilities rather than investors. Yep. So Sput hasn't bought anything in a year, and we've already shot up to like $66. And Sput hasn't bought anything this week. and yet the prices are surging. So just last week at the WNA, it raised its forecast significantly for nuclear power's contribution to worldwide electricity generation and demand, and uranium demand. So now it estimates that more than 140 reactors could operate longer than previously expected, and 35 gigawatt hours of small modular reactors could be developed by 2040, requiring new mines to be developed to meet uranium's demand, doubling to 130 tons annually. Doubling 100% more than it was the year before, or on a year-to-year basis. Let's go finish up the rest of this article here. The nuclear fuel supply chain has been rocked by Russia's war in Ukraine, since the aggressor nations plays a vital role in conversion and enrichment of uranium. Yep. There has been an imbalance between supply and demand for some time, and it has now been exacerbated by geopolitics. Said Nick Lawson, CEO of Oceanwall Brokerage, who predicts that the uranium spot price could rise to $200 a pound by 2025. You see, I didn't just have clickbait on my title. This guy thinks it's going to $200 a pound by 2025. And spoilers, 2025 is a year and a quarter away. All right, let's look at chats here. Drop me a super chat, guys, if you're enjoying this content. All right, so Jonathan says, off topic, but do you do your beard yourself or go to the barbers? If the latter, what do you ask for? It's at the barbers. I just ask for a trim. Really. I don't really have like a style that I know, but yeah, I'll just fix it up. I'm on YouTube. You can have my beard hair just going all over the place. Maybe pre-YouTube I could have, but not anymore. Those days are long gone. YC. He says, hi, for CIS is going well over $2 in next uptrend. Check it, please. Will way outperform URA and URNM. Let's look at some charts really quick. So yeah, I think we looked at for CIS metals a few days ago. So yeah, it broke out. Strong green candlesticks. And so far, from the bottom here, it's more than doubled. So yeah, it has outperformed. All right. Philip Watts, flood. The Cigar Lake flood was what precipitated the last bull market. At least that's the prevailing narrative. You would be correct. Good job, sir. You get a piece of yellow cake. A piece of virtual yellow cake. Let them have yellow cake. All right, let's pivot over to this tweet here from Rana. So they're responding to the article we just read from the Financial Times. So let's see some of their takeaways. Or some of their responses, so to speak. So they say, I've spent hundreds of hours researching this. All right, point number one. The yellow cake U308 price will stabilize at $90 to $230 in the long term to enable new mines to profitably come into production to meet even the modest reference case. WNA demand of 2026. We just looked at that chart. All right. We're still quite a ways away from a $90 price tag on uranium. In the meantime, U308 will spike to well over $170. Some scenarios see $250 in 2024-2025. Interestingly, a Cambridge University modeling paper from 2014 to 2015 foresaw this. See if we can open up this research paper actually. All right, so I think this is it. So they plotted the base case from the 2015 Cambridge University study, I guess, and supply predicted against the prevailing actual spot price. So what do we got here? Let's see. It's my first time seeing this actually. So on the spot analysis. All right, so they've got their predicted price here in black, this black line, and then they've got the actual price here in red. And so what's their predicted price in 20? Things are really hard to read. So it looks like it peaks at around 150 in 2024. So yeah, this is an 8-year-old study. But we're actually underperforming it at the moment. So we're currently here. This red line is at $60 for 2023, where we're at today. And it thinks that we should be all the way up in the 140 area, which we're not. So we'll see if we just like suddenly spike all the way up. Not too sure here, but notice the last spike, which is circled by this yellow dotted line, or this yellow circle, we significantly outperformed the predicted value. They predicted us at around $90, okay? We had 140. Now they're predicting us at 140. Are we going to overshoot? Are we going to is 200 going to be the overshoot? All right. Let's see what else we got here. It's from Stock Dog. So Stock Dog has kind of got this. So this is the uranium price over the last 3 bull markets. Now, all of us are very well aware, or most of us. I don't want to be. I don't want to assume anyone's knowledge, but most of us are aware of the last bull market of 2000 to 2007, right? We spiked all the way to 140. That happened in the span of 6.5 years. That saw a 19x or an 1,800% rise in the price of uranium, right? So we went all the way down from, I don't know, like 10, like 15 or something to 140. Actually, it would have to be less than 15 because it's a 19x. Probably like 10 or 7.5, 750. Anywho, this was the price. I mean, this was the bull market of the 70s. And it lasted 5.5 years just about and jumped 7x. And this is where we're at today. We're closing in on 7 years on this thing. And we're only up about 3.5x, guys. I mean, if this bull market ended today, it'd be the weakest bull market we've ever had in uranium. Granted, we've only had 3, but it would underperform all these other bull markets from just purely a capital gains perspective. So, I mean, what do we got here on the tag? So 1973, new construction of 441 nuclear reactors. Okay. So when you start building out these nuclear reactors, what happens? Demand starts to come on, and boom, the price starts to go up. And then the Nuclear Regulatory Commission And now the Nuclear Regulatory Commission was established in 1974. And what did that do to the price? Just stopped it in its tracks at $40. and then a partial meltdown at 3 Mile Island, and then this thing went straight down the toilet from 1982 all the way up until, 2000. A 20-year bear market. Goodness. That is... yeah. I mean, kudos to you if you're an old veteran in the space and you were able to kind of hold out throughout that entire process. I mean, you had a huge spike in 07, 08 to make up for all the time you waited. An 1,800% increase. But anywho, so 91, Cold War ends. Comprehensive Nuclear Test Ban Treaty. And then 03, 07, the commodity super cycle starts and inflation starts to rise. And then boom. This thing spikes all the way out in 08. GFC happens. And then all these banks start to dump commodities. So it was an exogenous event. It was a market sell-off. So, this thing didn't just top out by virtue of its own mechanics. There was a market meltdown vis-a-vis the GFC. All right, what else we got? So this is from Green Investing Co. It says, Olympic Dam uranium not going to the spot market. Start things off here. So it says, our uranium. Can you guys see? I don't think you can. It says here, are uranium producers around the world moving away from the spot market and into long-term contracting? With the uranium prices heading up to 12-year highs, linked to the global nuclear renaissance, investors are looking for signals to confirm their bullish momentum thesis in the sector. Yeah, I mean, the spot market's all dried up. Spot is not buying anything from the spot market, and yet it's moving up. Okay, so BHP's Olympic Dam uranium mine, located in outback South Australia, is a significant location in global nuclear supply chain. The polymetallic underground mine is home to the largest known resource of uranium in the world. Vital to ensuring the Western uranium market is supplied, the area is also undergoing significant exploration for copper, uranium, and other critical minerals required for net zero global economic transformation. According to some estimates, the mine produces about 6% of the global uranium supply. Okay. In 2022, 2023, Olympic Dam produced 3,400 tons of uranium a year, or 6.8 million pounds, with a reported 2023 full-year revenue from uranium of $362 million. That would be an estimated sale price of around $53 a pound. Okay? That is approximately in line with the uranium spot price from July 2022 to June 2023, which hovered from the high 40s and mid 50s per pound across the Australian financial year. All right. So what are they trying to say here? Are they trying to say that Olympic Dam was kind of keeping the price there at around $40 to $50? Interesting. However, reports are now suggesting BHP executives have decided to turn a long-term contracting directly to buyers rather than selling into the spot market. Okay. So basically, the spot market was being filled by BHP. But now, BHP is out of the spot market. Now, what happens now that BHP is out? no longer supplying uranium to spot market participants, and SPUT and all these other uranium financial vehicles like SPUT, ANU, and all these other ones start looking for uranium in the spot market, but there's no one to buy it from. And yet, they're legally obliged to buy that uranium when they're at premium to NAV territory. At least SPUT is. I'm not too familiar with the other vehicles. Chat, if you know, let me drop me a comment down in the chat. All right, so this is a quote from John Quakes again. I mean, we are getting a lot of mileage out of Mr. Quakes. He is truly a national treasure and an international icon when it comes to nuclear power news. Word on the street is that BHP, at the insistence of nuclear fuel buyers and traders who need reliable supply contracts, have been entering into long-term contracts, so no longer selling uranium into spot. Other former spot selling producers are doing the same to meet demand. So, when you start going into the spot market looking to buy uranium, you're going to have a much harder time to find it. And if it dries up in the spot market, what do you think it's going to do to the spot price? If that proves true, uranium investors believe that the spot price bullishness seen in recent weeks could become even more pronounced. We'll have to await confirmation. Whatever the case is, the uranium bull case continues rapidly to build. My God. I mean, the uranium spot price is sitting around $66 on Friday. All right, yeah. We already knew that. So, like I said in a tweet earlier this week, it's not all gas, no brakes. It's all nuclear. All breakouts. I mean, where do I come up with this stuff, guys? Like, am I a creative genius or what? All nuclear power and all breakouts. All right, next article. Can China's nuclear ambitions offset its coal addiction? So, it says, while global nuclear power growth has been slow, China's nuclear power generation has more than tripled in the last decade. Okay? Despite leading in nuclear power production, the U.S. has seen stagnant growth in the sector, with new reactors coming online after 3 decades. As the world aims for net zero energy by 2050, there's a pressing need to bolster nuclear output and combat public skepticism. The tide is turning. The tide is turning on the nuclear story. A bunch of people that wouldn't have gotten on board 3 years ago are now getting on board. It's going to happen. It is going to happen. You know what? This is going to sound kind of controversial, but I'm not even all too worried in the long term about a nuclear disaster. Why? Because even if one happens, God forbid, the world is short energy. At least like easy to extract energy. So we've got to use nuclear. It's just an inevitability. Drop me a chat. Chat, let me know. What do you think? Would a nuclear disaster actually set us back like it did in 3 Mile Island in the 70s bull market and Fukushima in the 2000s bull market? Or is it different this time? I know you're not supposed to say that as an investor, but it really is different this time. Conspiracy Muscle says, been investing in uranium since 2019. No way we're going to power EVs on wind and solar. I'm not going to disagree with you there. YC says, sorry to ask, but could you check the URA chart and make some projections? It would be highly appreciated. So we actually went through the Uranium charts, which highly tracks the URA chart earlier in the stream. But if I have time towards the end, we can look at URA too. Just remind me. Right, YC? And if you guys would be... if you guys would help me out, anything helps. Super chats help. Anything to keep the lights on. If you enjoy this kind of content, you help keep me going. Yeah, drop me a super chat. All right, so it says the is the 6th article in the series. Yeah, I think that's a mistype. Previous articles have discussed the trends in global carbon dioxide emissions, the overall highlights of the review, the product consumption of petroleum, nat gas, production and consumption, and coal consumption and production. So I think, yeah. Today we'll cover nuclear power. Nuclear power is unique among energy sources. It can be scaled up to very large power plants. It is firm power, otherwise known as base load power, available on demand, and it produces no CO2 while generating electricity. Now, this is a pet peeve of mine that I'm glad this article did not commit. See what it says here? And it produces no carbon dioxide. Dioxide, okay? When you go to a restaurant, do you just tell them, oh, give me a glass of hydrogen? No. Water is hydrogen dioxide. H2O. So why do we say, why do all these people talk about carbon credits? Carbon this. Well, carbon? Do you mean carbon dioxide? Is that what you mean? Because that's... Anyways, get your story straight. That is what I'm trying to say. A 2017 paper from the University of Texas identified nuclear and wind power as the power sources with the lowest levelized CO2 emissions. The levelized carbon intensity, oh my God, carbon, CO2, guys, carbon dioxide intensity is calculated by dividing a power plant's emissions over its lifetime by the overall expected electricity output. Okay? So you're taking, it's essentially a ratio. You've got the emissions on the numerator, and then you've got the electricity output in the denominator. And the idea is that if you retain that ratio below 1, then you're creating more energy than, to kind of offset the CO2 emissions. Nuclear and wind were respectively 12 and 14 grams of CO2 per kilowatt hours of electricity. By contrast, power produced from coal, which is still the world's largest source of electricity, produces more than 70 times as much CO2 per kilowatt hours of electricity. Yeah. I mean, look what Germany did. They decommissioned their nuclear power plants. Now they're burning coal. Yet, global nuclear power growth over the past decade has been a paltry 0.3% a year on average. In 2022, nuclear generation actually declined by 4.4%. And this chart shows just that. We had a big move up in nuclear energy generation up until the early 2000s, and then it just kind of moved sideways. And anytime you have these disasters like Chernobyl in 86, you can kind of see it slows down a bit, right? You're adopting this thing pretty much at a straight line up, and then it just kind of curve like almost 45 degrees. this way. And then Fukushima happened and it's like completely stopped this thing in its tracks. So it says here, the following graphic shows how these two incidents impacted the growth of nuclear power. They are the difference between a world that rapidly phased out coal and one that didn't. Yep. And I think this is, just essentially just comparing nuclear energy generation to coal and how paltry nuclear power is from an overall share of electricity generation in the United States. So, U.S. nuclear energy power generation from 65 to 2022, we were skyrocketing up. 2001 happens, flatline. And now it seems like it's come back. Are we going to see demand begin to pick back up again? Are we going to see this hockey stick-esque move to the upside? We'll see. We'll see. So, China is the fastest growing major nuclear energy producer, more than tripling its nuclear power generation over the past decade. At the current growth rate, China will surpass the United States as the world's largest nuclear power producer within a decade. So here's a little ranking. The top 10 countries in regards to their energy, to their nuclear power production capacity. So United States here at 812 terawatt hours. China at just about half of that. France at just under 300. Russia at 223. And then you've also got the global share, right? The United States still makes up 30% of global nuclear energy production. But as you can see in the charts above, the growth rate is zero, right? 10-year annual growth rate is zero. Whereas China has been growing at 15.6% a year. France is scaling down. Russia's moving up steadily at 2.3%. South Korea is at 1.6%. Japan, 11.1%. Hello, Japanese restarts. So as the world's largest consumer of coal, which is China, it is encouraging to see China ramping up nuclear power in India. Ramping up nuclear power. India, on the other hand, the world's second largest coal consumer, is also increasing its nuclear capacity, nuclear generation, albeit much slowly. Do we have India in here? No, we don't. Okay. The IEA has projected that we will need to double the world's nuclear output by 2050 to reach net zero energy. We'll see if that's still around. Although we can't change the past, we can work towards improving the public's attitude towards nuclear power. It is impossible to build, design, and operate nuclear power plants that can't suffer the kinds of disasters of Chernobyl and Fukushima. Now, all right, that's enough virtue signaling. Oilprice.com was the site that published this. It wasn't uraniumprice.com, it was oilprice.com. All right, Justin Lazerte says, yes, it would set us back. Tinfoil hat. Would the big oil companies set up a sabotage of a nuclear plant to set nuclear back a decade? I mean, there are people that think that the Fukushima incident was a planned event, but I don't think so. I mean, I don't know. This maybe not. We'll see. All right, Conspiracy Muzzle says, the Earth is supposedly 70% water, and most of the water is filled with algae, which sucks up all the CO2 and gives us back oxygen. Yeah. CO2 is like what? 0.04% of the world's atmosphere. And the portion that humans contribute to is like 3% of that. So if you track CO2, CO2 share of, I guess, within the atmosphere, You're looking at around 280 parts per million in the 1900s, up to 400 parts per million today. So it's been very, human contribution, when looked at side by side relative to the entirety of the atmosphere, is pretty small. I'm not a climatologist, though, so, I could be missing something there, but... All right. We got another tweet from John Quakes. So, what do we got here? In his new Contrarian Codex report, Mart, aka Yellow Bull 11 on X, summarizes the feeling that... Let me make this readable for you guys. Summarizes the feeling that many uranium mining sector veterans share right now. After years of hard work in the sector, the eventual... Oops, can't even see it now. The eventual reward looks like it could end up being better than I could have imagined. All right. Chat, can you see what it says here? Anyways, I'll read it out to you. While robust and balanced upward price discovery may still happen, I now believe that a price spike is more likely than not. Not just a normal price spike and then a sharp drop either. No. The way that things are setting up could see the market break and exceed expectations in a way that I would have deemed simply impossible even a year or two ago. The sheer combination of low inventories, uncertain primary and secondary supply, robust and growing demand, both foreseen and unforeseen, and additional influence from other entities such as financial, like SPUT, have turned the bull market thesis from something that was very robust into something that has the potential to absolutely tear. If it seems like I have a hard time, I was going to say something else, a hard time containing my enthusiasm while writing this, it's because I am. After years of hard work in the sector, the eventual reward looks like it could end up being better than I could have possibly imagined. Incredible. And yeah, this is from Yellow Bull, from the Contrarian Codex. All right, YC, you still there, bud? I'm going to look at your URA chart really quick. All right, let's look at URA. We missed URA at the beginning of the video. So URA acting a lot like URNM did. You can see here, clear breakout to the upside. And we are... we're going to have a boss fight this week with this April 2022 high. Bring your potions, bring your Phoenix Downs, all this nerdy stuff. Load up on ammo. We're going to crush this thing. We're going to destroy this boss, this April 2022 number, and we're going to make our way towards the final boss. Price projections, kind of tough to say. I did do some work before. Let's look at this thing from a holistic perspective. So we're at 2670. The 2011 highs were at 137. If we just retrace back to those highs, that's pretty much like a 5x, just about. Now, that's not even taking into account the, what is it, the 2007 and 8 highs. So we could well overshoot that. I do think that we're in store for something along the lines of at least a 9x, given the current makeup of the market caps of the various mining companies. 45 billion today versus 150 million 15 years ago. Add into the fact that we've tripled the money supply since then. It's like a 3x time. You're you would essentially have to triple the market cap, and then to kind of control for the added money supply, that'd be another 3x on top of that. So you're looking at about a 9x there. But let's look at URA divided by M2 money supply. Controlling for all the added liquidity into the system. You know what? I probably have to add in constant here just because M2 is just such a big denominator. All right, so we would need, looks like over a 10x. Yeah, it's like an 11x just to get back to those 2011 highs. So uranium looks really strong, guys. Don't forget to drop me a like if you enjoyed this live stream. I'll start to do more of these live streams. I really enjoy it. But you guys got to drop some super chats. You guys got to drop some super chats. I can't keep just doing this these questions for free. Share the video. Like the video. Comment down below if you haven't already. And there's nothing else that you guys want to cover. We can just sign off for now. I know the Australian market opens in a few hours, so that'll be exciting to look at. Chat, what do you think? Do you think we'll open in the green today on the ASX? Give me some ones if you think it's green. Give me some twos if you think it's reds. Give me a 3 if you think it's going to be sideways. What do you think, chat? Let's look at CCJ actually. Let's compare CCJ while we're at it to the M2 money supply. Because CCJ was around during that big boom period in 07, 08. And yeah, we've got a B.Woo thinks ASX is gonna open in the green. Yeah, so if CCJ is any indication, when you control for the added money supply, you're looking at another triple to get back to those 07 highs. Now, this is one of the biggest market cap companies in the space. All right, guys. Hope you enjoyed the video. Like and subscribe. Do all the YouTube stuff I always tell you to do. And with that said, I will see you in the next episode, next live stream. I actually have an interview with Andy coming up to be posted tomorrow, so be on the lookout for that. Andy from Finding Value Finance. I know you guys like him a lot. A lot of the folks that watch this channel also watch Andy's channel. So there's a lot of there's some intersection there. But yeah, be on the lookout for that interview. And I will see you then. Bye, y'all.